Hi everyone, and welcome to my channel. My name is Carol. I'd like you to hit the subscribe button and like the video. So today I want to talk to you about something I've mentioned in passing, but I haven't actually put it together in one video to simplify it for everyone. Now, I'm here mostly to talk about SARS issues, tax and accounting issues. Today, I'm talking about basic compliance. So we're talking about the very basic, very bottom line, necessary filing for every company, every entity in South Africa. So to start off, obviously, you would need to register your company with the CIPC, which is the body that regulates all company registrations, all the way from closed corporations, Pty Limited, CCs, INCs. We've already mentioned closed corporations. Whatever company you're doing could be an NPO, but the CIPC is where it all starts. So once you have your registration document, you would typically open a bank account and then you can start trading. Once you have that, make sure you have your company tax number. And of course, the next step is to register for e-filing so that you are appointed as a public officer. Now, this is almost always one of the directors. A public officer is simply the representative that SARS would deal with should there be any issues of correspondence, and they would clearly bear the burden should there be liabilities in the future. So you are the face of the company and you are who SARS would deal with. A lot of clients think that we, as the company tax practitioners or the auditors or accountants, should be the public officers, but that is not the case. Public officer should actually be an internal person, such as the trusted director. So now that that's out of the way, you need to know what your statutory requirements are. So given that most people, when they register their companies, their year end is aligned with the SARS year end, which is the last day in February, which is almost always the 28th, except in a leap year, most people would then require to file provisional tax returns in August and another provisional tax return at the end of Feb. So end of August and end of Feb. What do I mean by that? Well, since the tax year starts in March, and presumably your company year also starts in March if you have a February year end, that would mean your first provisional tax return for the first 6 months would have to be filed by the end of August. It's an estimation, remember, and we've said before, if you've made a profit, you're paying the tax. So I'm just clarifying that your first tax filing, SARS filing, would then be the provisional tax return in August. Your second provisional tax return would be filed at the end of Feb of the following year, and you're then incorporating the full 12 months from March of the previous year. It's the second provisional tax return, so it's taking care of 12 months. Again, it's an estimation, and if any tax is due, it is paid at that stage. Having gone through to the end of Feb, if you've been trading for 2 years or so, that means your financials, right, for the previous year and the income tax return, not the provisional, the income tax return, also have the same deadline, which is February, end of Feb. So if you've been trading for a while, that means at the end of February, you're supposed to be submitting 2 returns, at least by then. It's the provisional tax return that we talked about, the second one, plus your income tax return accompanied by your financials for the previous year. So please don't get confused. SARS typically then gives you about a year to do your financials and submit your tax return and put your house in order, because they've already seen from the provisional tax return your estimated results. So as far as SARS is concerned, that is it. It's 3 tax returns, 2 provisional tax, 1 income tax return. And remember, SARS is always running a year behind in terms of the deadlines, and you would then only need to do your financials within the next year after year end. I must qualify one thing. If your year end is not end of Feb, very often it's March, it's April, it's June, December, then your provisional tax dates are different. It means you need to count the 6 months from, when your year starts. For instance, if your year end is December, that means your provisional tax return, the first one is due at the end of June, and then your second one is due at the end of December. And so on. If it's April, same thing. If your year end is April, you count 6 months, right? So that means at the end of October, you're submitting your first provisional tax return, and at the end of April, your second provisional tax return and income tax return from the previous year. I hope this helps. The only other statutory filing for all companies is, as we've mentioned before, the annual return to CIPC. Please don't get confused. With the CIPC annual return, it's at the anniversary of the date or the month that your company was registered. That's when you file it once a year. If your company was registered, say in January of 2026, then by January 2027, you will be able to file the CIPC annual return no sooner, because CIPC will only allow you to file it closer to the time. Remember, when you're filing your CIPC annual return, there is now also a requirement to fill in the beneficial ownership. So you do the BO filing first, then the system allows you to file your CIPC annual return. And that, in a nutshell, is the gist of all the basic, what I'd call the basic requirements. Of course, there's a lot of add-ons as well, which we'll tackle in our next video. Things like VAT, when you register for VAT, your pay-as-you-earn UIF, and then outside of that, you've got your Department of Labor, other monthly reportings, and COIDA once a year. So it just depends on what field you're in, where you're registered, and where you're going. Thank you.